Welcome, Violet Universe, and happy mostly Monday for most of you. I'll be seeing this on Monday rather than Sunday night. Um, let me jump into screen sharing here first. Okay, the first thing we're going to look at, and let me just give you a little background on these recaps. You can go in and look at Model Sim Professor on YouTube and look at a lot of previous recaps from other teams and universes also, especially first ones for Decision 1. This is, of course, a recap of your Decision 1, but you can see before Decision 2. There's a video on that. You can see other recaps on Decision 1 for other universes. So there's a lot of videos that you can use to get the feel for what's going on. To begin with, this is where we all started, and I also posted in Halo a bunch of starting financials like this for each line. But you can see here, these are when we look at our various units in terms of low cost, family, eco, and image, you can see that low cost and um, eco are always losers and family's a strong winner. We have to keep making that a winner. And then we have to build on image. These are our cash cows and our superstars, and these are our question marks going forward in other decisions. So we look at first at better or worse. And now I'm going to show you these real quickly. I don't want this to be a long video but I'm going to get you a lot of screenshots. And I encourage you to take screenshots of these images that I bring up and these numbers we've crunched for you so that you can save them for your final report in weeks and your end of last decision week 7 and week 8 for your final report and your final PowerPoint because you'll have a lot of data to show and it'll make it a lot easier. And this course is heavily weighted towards the end. So it's a relay race. We're building to that right now. So at least take screenshots of all of these various financials so you can analyze them later as you need to, but also for your next decision, for decision 2. Are we better or are we worse? Take a little mental snapshot of that. And here's where we ended up after decision 1. So you can see that um, our family, our family line, which was really high, everybody except Blue got kind of killed in family. Blue is getting towards this middle line. If at the end of this sim, your ROSE and your retained earnings are flat and everybody's above the line, you'll have had a fantastic sim experience and you can look back and see, this is what happened. These are our financials. I posted these in Halo. You can also take a snapshot of them now, but you can see where the team's strengths and weaknesses are. Yellow, made a huge play for unprofitable revenue, which is they came in second, but they they also are very much underwater and because when you go after, you'll see this is driven very much by your lost orders over inventory. Where you go after a line and you build crazy wild revenue, but you don't watch EBIT, you're going to get a lot of revenue and you're going to do well, except that your profit and your ROSE are going to just get killed. So you can see, let's just look at ROSE. I haven't looked at these in detail yet, but we should see, yes, okay, look at this is what happened to yellow. They went for a big revenue play, but it was every unit sale extra was um, unprofitable revenue. So it killed their earnings. Stock shares shouldn't be too bad. But we looked at who's number 1, 2, and 3, and everybody's within 1 point. So at this it's really virtually almost a tie for first because they're very different strategies. Um, Everybody stayed okay in terms of image. Image is also a strong line. Family, you can get killed on because family needs dealerships. Family, you can get way ahead of getting a lot of demand and building a lot of unprofitable revenue like Yellow did and still do great in revenue. But when you look at then the six indicators you can when you look at employee morale and all that in our other report, which you'll see in a second, you'll see revenue and employee morale are tied together, and so is profitability, but also so is quality. So if you see the other big differences, everybody didn't do much investing in terms, kept the same investment there. You do see a red line, big red line here for EBIT as well as ROSE because obviously yellow got killed generally in either. But the key indicators that revenue bring you in terms of the all the financials like accumulated return earnings, etc. Now are weaker when you don't have profitable revenue. So now let's see. HR quality spend. Let me see. Well, we'll look at our cash position in a second. So anyway, that's our better worse. You can kind of look at the two of them, go back and forth, say where did we start? Where are we better? Where are we worse? And what do we need to do for decision two? That's the absolute key. Let's jump into more financials. We're back here to where we ended up today. This, of course, we just looked at that, comparing better, worse. Now let's look at the lines. These are just for snapshots again. This is the low cost. Take a picture of this. All these were for the starting position, which you don't have to dwell on the past, but you can see where the difference are, better, worse, from the past ones that I posted in Halo. And you'll have those, save these graphics, especially the white line. When we get to the white line, you'll never see the white line again, and you won't be able to see these when we move ahead periods. You'll be able to ask, if you're watching this Monday, it'll probably be Monday at, I don't know, 6 a.m., 7, 8, 9 East Coast, 6 a.m. here, that you'll be unlocked. This is locked right now because I can't create these graphics while you're in it. So anyway, we'll look at yellow had some major red flags here in terms of, because it looks at plant capacity and EBIT and LO, loss orders over inventory. And remember, this is the low cost line. So and then you'll see our family, our eco, and our image lines. But if you look especially at um, your sales and your demand, you can see that there wasn't much investment here, but there were perfect investments here in red and blue. And that's partially because of leaving the sliders kind of not trying a lot, leaving them alone. But one of the big problems are if you market the heck out of something, if you say, I'm going to be the absolute low cost demon, savior, whatever, in this sim, what happens is you can overextend because you're building appeal for marketing that's not even needed. You want like 100% across here. So if you have a huge amount of marketing, like 400%, that's way more than what the customer wants. You overbuilt it, so you're destroying your cash by all those engineering decisions. So you got to look at this and say, what did I do? What are all the moving parts? And we'll look at lost orders over inventory and see what happened there too. But you'll see massive differences here by overbuilding and marketing and then revenue, but not profitable. Yep, there it is. Look at blue. You did fantastic there. And blue's kind of in the blue team is kind of in the middle. This is the blue line. But then of course we already saw the EBIT picture, which contributed to it. Now family should be much better than they are because it's a gimme. But what happened in terms of price here? The red took a price chance here by raising the price to try to get more profitable revenue. And this is in family. And if you look at what happened EBIT wise, there's a middle ground of 100% compared to 122%. So let's look at EBIT here and see what happened to them. All right, see, we got killed in EBIT here. Same thing on family. And who did better? And you can see why they did better in terms of, what's their demand compared to the amount of marketing they spent. You want to be lower than that. But then really the plant capacity is what makes you or breaks you in terms of, you have really low plant capacity compared to what you're doing in revenue. You're going to have all those lost orders. You're spending a fortune on marketing, but you didn't make the cars. So because you didn't make them, every penny of that is wasted. So that drives your costs up for no reason. Eco is a very tough line. All the way to the end of the sim, people get killed on eco because of trying to let's be the greatest eco producer in all times. You can see what happened in terms of marketing appeal again with yellow here. They're doing they're doing a play here, but red, what happened to red? Look at the pricing here. And I did a ton of videos saying if you want to try for a price, go one or two or 3 points, don't go 20. Because what happens is that if you price way too high, you'll get your EBIT and your gross profit will be okay. But if you price lower or right within that 60 range, you'll even have your revenue will be better, but then so will your gross profit. Let's see, where's gross profit? Right here, see, so you're 11 here compared to, so again, these look, there's been very different portfolio decisions. To take a chance on eco, the problem is, and you'll see emissions are going crazy. It's like, what? This is eco. And consumption is very expensive. If you build that up to a high consumption, which means very good gas mileage, more consumption is better because it's actually less consumption. More is better, but it's worse in terms of CapEx. Consumption, a number of models, there are certain things that are really high in terms of the cost in CapEx, which drives then your plant costs. If you don't make enough your plant capacity, you have to be very careful of that in terms of your investment in your plant, and then especially how much of your capacity is used. You want to see your capacity around, 85, 90%. And if you get killed here, like you used only 50%, you're building a whole bunch of inventory, and you'll see that on lost orders over inventory. So, and then finally, an image, which everyone did quite well in, but could be way better. You can see again, if you're at 120 red, and you didn't do terrible, but when you do this big of a price increase, and I said on the first decision, even on many more, make little small changes. Don't try to do something giant unless you've already built a flywheel, meaning you have great operating and financial leverage and margins, and you have a big installed base so you can spread those R&D costs or engineering costs over a bigger base. That way you're not going to get killed. So you can take bigger chances once you have a flywheel, but nobody does in decision one. So red, this should have been 122 or something like that, just as a tip. And then are you over engineering? Well, yellow under-engineered here, only 53%. They made a big play in eco. So these are all portfolio decisions. This is all, nothing's bad here. It's all, ready, fire, aim until we can see ready, aim, fire. What is our portfolio? And that's what business strategy is. It's all pipeline and portfolio. When you get into any business, I don't care if it's services, software, high CapEx manufacturing, whatever you're in, you have to look at your portfolio. I mean, if you're making drugs, they don't care what you're making now in revenue now. What's your pipeline? What's coming down? Can you be big? What's in the future? What's your pipeline? And then what's your portfolio? Your current. What do you have that are dogs, stars, question marks, cash cows? How are you balancing that? Well, y'all made a big play on eco, but they didn't make a big play in terms of engineering, as you can see, on what the customer would want, the value chain in image. On the other hand, red made a huge investment there, and blue is moderate in terms of, okay, how are we going to invest, where are we going to put it? And it shows off in terms of especially your share, your percent share, which is right here. Yes. Okay. So it's 30 and right. So blue did great. They got great market share there, and yellow and red are not too bad, but they did equal other extremes. They over-engineered or under-engineered, and it's better to be closer to 100% if you can. So again, take pictures of those snapshots. Let's immediately jump over to mouse over to inventory, and then we'll go back to the white lines and conclude this with the white lines. Okay, here we have lost orders over inventory. And this is the absolute kind of best indicator of what's going to happen with your portfolio and the whole sim. By the end of the sim, you saw, if you attended the onboarding video, you saw that they started out variable like this, and by the end of the sim, all three teams are like along this zero line because you figured out production. This is supply versus demand. And any graphic, probably if you have a ratio, lost order or inventory, it's the opposite on the graph. So just because of when you do a zero index mathematically. So this is inventory building above, and it's huge loss orders below. So if you made a big play in low cost and you did everything you could do to make that your main portfolio line, but you did not make enough, these are all lost orders. way, way down here. So yellow did a fantastic revenue play. They made a great portfolio decision, but did not match supply and demand. And there's that slide I show all the time. How do you do planned capacity? It's basically you add back the depreciation, you look at your capex per unit and multiply that by the demand forecast. That's been posted 3 or 4 times in Halo. Post it again because it's such a key slide. Everyone says, how do we, towards the end, they're saying, how do we figure out the supply for this demand? It's a very simple, four-function math. There's no calculus. There could be, but you don't really need to go there. All you need to do is figure out what's the ratio, add back depreciation, and bam, you got exactly the capacity you need for that line, that time, next period with the forecast for demand for that line. So again, you saw this and you also saw what happened in terms of yellow with low cost as well as family, when you build that kind of, when you have those kind of, when you make a play for something, but then you don't make enough. So now let's look at family. This should have been fantastic, family. And our zero lines here, you can see red is building inventory. Blue did very well because look with how they matched family here. They have much less loss in family. This is such a great predictor. Now, same thing with yellow. Yellow is having a huge supply. They're doing fantastic on demand and getting a lot of revenue, but they're losing money like crazy because they have all those orders and they can't fulfill them. You're going to the dealer and you're frustrated because you want this car and it's available next year. You want it now. You're going to make a decision. You're going to go to another dealer and get another car. Are you going to get a hybrid? You're not going to get a Toyota. Are you going to get a Hyundai? You're going to get a Ford, a Chevy. What kind of Chevy Volt? What are you going to get? Well, if it's not available, you're going to go get one of the other ones or go to another dealership. So these are all lost orders because of not producing enough. So that's why yellow and yellow is below the line and EBIT on all this. So you can see what a fantastic kind of predictor this is. And yeah, now don't think, oh, that's terrible. We did great. You're all 1 point apart. Everybody's tied for first, basically. And yellow, technically, they came in number two, strong number two. So it's just 1 point away. But just when you look at the six indicators, you can see how do the points work. And it's the lower the better, because if you're all number one and six indicators, you'll have 6 points because you'll all be number one. If you're number three in all six indicators, you'll have 18. So 18 is the worst, six is the best in this universe. Obviously, if there's 17, it's different. So let's look at eco-friendly. Again, we have, now this is a little more, this is very interesting. Where's the zero line here? So remember what we're shooting for here, and yellow's not so bad here when you look at where's the zero line, because everybody started up here. Everybody started with a lot of inventory. Remember that? I showed you LOI, we posted that in Halo. And now we go down here because you can see the whole picture. And if you draw a straight line there, that's where everybody wants to be. I want no inventory building going up, no lost orders going down. I match supply and demand perfectly. So demand minus supply minus demand, it comes out to be zero. They're even. A equals B. Your supply is matched to your demand. So we have reds. What are the trends? The trend for blue in eco-friendly is not good because you're moving away from the zero line. In other words, you're building inventory. You're making plenty, but you're not marketing enough. So you didn't make a choice to let's market eco really big. You can't sell a plant when we get to mergers and acquisitions. In this sim, it's the 8-week course you have to, I'm sorry, the 10-week course with 8 decisions. But but you can defeat your line. Let's say I'm so sick of eco, I do not want to do it. You back everything off, but you pay for your depreciation and you have morale because the people are still there on the plan, even if they're making only one car. So you can back off of a line, but that takes very delicate moves of the sliders and the boxes. You have to know what you're doing. That's by decision 3 or 4. I guarantee you'll be experts at this by decision 4 and 5. It happens every sim because people go, I see what's going on. And that's the light bulb going on with this sim. It's like a real business. You got all these moving parts and you suddenly see what matters. The developers and Harvard and Mega are not real happy that I show all this LOI because we kind of ran algorithms and figured out how close they were to EBIT. But not all the other courses show you this even. I get accused sometimes of spoon feeding, saying, hey, these are adult learners, let them school of hard knocks. It's like, no, there's not enough time with only 5 decisions. They have to learn what's happening very quickly. So I will keep showing these. Now, everybody did good in image, but it could be a lot better because it's our premier line. So the let's see, what's image with blue? Let's see what's going on with image with blue here. Where's blue with image? Okay, so yeah, you can see blue didn't do as well. Everybody's above the line, but you can see red did well, and yellow didn't do bad either. So look what a great indicator this is. We're not supposed to know this right away, but I'm showing you the secret sauce here, where you had a lot of lost orders, meaning you had blue did great, but they're our leader, but still 1 point, but still they're a leader. So and I guarantee that someone can crash and burn, and by the last decision, take the whole thing away. That's happened so many times because there's a trick in decision five that in week 7 that we won't talk about now. It's a long time, but there's a trick you can play with inventory. But here you can see the lost orders happening with blue in that premier family line because they're not making enough. So you got to match your supply. You got to make enough if you're going to make a strong play in image. And red did better than anyone else because they're all closest to and when we looked at that, you saw that. And yellow, of course, is the opposite of what they've had before. They're building inventory here. So they're not marketing enough in image, but they are making a ton. Now, it's not terrible. It's not terrible, but look at how great red did in image. And so that makes you profitable. That's why they're only, you'll say, wait, red is last. No, nobody's last when you're only 1 point apart. I mean, let me get to this if I could show you this. Look at the indicators and the points. So we got emissions, and the yellow came out number 1 in emission. And yellow, when you're saying, well, how could they lose so much money and still be not number last, but come in the middle between the 3 points? Well, they were number 1 in emissions because they made a big, strong play in eco. However, that to make that strong play cost your EBIT. It's a very expensive play to try to make, but you still are number 1. In terms of revenue, they're obviously number 1. They went for it in revenue and in all right, we've got to see, this should be morale. Yes, okay, these are tiny slides, sorry. But this is morale. Remember I said morale is very tied to revenue? You're proud of your company if they're really doing a lot of sales and you're seeing those cars move out of here. So let's see. So if you add these all up, you'll see that the best team, number 1, was 11. There it is. It looks giant here. Wow, look at how much higher there we are, but they're all 1 point apart. Sometimes you can have 6 points here and 18 here because somebody really died and killed themselves. Everybody did great. I mean, this is what 11, 12, and 13. Yeah, 1, 2, and 3. So 1 point away, everybody's basically tied because everybody was number 1 in something or consistently number 2. And that's like red team, they were second in almost everything. The only thing was morale because of the revenue there. But blue did really well. They've got number 1s and number 2s. This is a fantastic group of decisions here. When you're number 1 and number 2 in everything. So now you can jump next decision and say, let's change those 2s to 1. Let's change those 3s to 2s. In other words, looking at where do we need to invest to keep on moving up. But this is really a fantastic start. A lot of the times, we're going to quickly go over the white lines here. This is red team. We're going to jump through these very quickly and just take shots of them. Let's look at our business lines decisions very quickly. And now we have our famous white line. These are, of course, what the customer wants in the white line, and these are what actually was done in all of these sliders. So this is low cost, and for everyone you can see where do we need to be. And if you looked at the onboarding, you saw how closely matched these were. We don't have to worry about the perception. This is actually decision, which is the bright blue line. And how close are you in these things that the customers want? Now, if you did a huge amount of consumption red, you're just nine. I said don't go too hard, too low, but in low cost, this would be an eco profile. I mean, they care about consumption in low cost, but this is the cheat sheet. It tells you where to put these. But I invested way too little in that should be performance, right? Performance is very expensive too in CapEx, but I invested too little compared to what they wanted there. I was really did well in design and comfort, right? Yeah, look at design and comfort are very close. I invested too much in in robustness, right? And almost good in size, but then I dropped. And this again, this is just over unders. This is not a time series. This is what do they want and what did you do? So these are just should be just snapshots. I don't want to explain them all, but once you get the idea of if you're crashing and burning, you don't know what to do, match the white line. Go back and say, take a picture of this and say, oh, here's what we need to do next decision, how we have to change these sliders. And I'm showing you what your competition is doing too. Family, same thing. You can see, wow, much better, much closer match. Look at that. This is what we want to see, but there is overinvestment here. Remember, we saw 100 and some percent. Same thing with marketing. You can over and under market, but it's not, you can see that in the numbers better than this. Let's go to eco. Again, not wherever it crosses over. Invest a little more, invest a little less, invest a little perfect, perfect, perfect. Wow, invest way less. You've got something up here that is, this is consumption. What is this? Eco. Yeah, they care about consumption, but let me see what, yeah, look at consumption. Again, 8. In all the videos, I said, if you're at 4 on everything to start with, go to 5 or 6. Don't go to 9 or 10 on anything. So, and not everybody watches the videos, but it's still, that's what you have to be careful of. What do they really want? And the cheat sheets tells you the white line. This is what they really want. But remember, when you invest, it changes the white line because they want what's available. And when you invest, it changes things. So this is not a static sim that you can crack or bust. So image is really important. Everybody did fairly well in image, but you can see where there's a huge over investment. Technology, they love performance, obviously, but you still had a little bit of over investment, but not bad. These are very close and very good, but there's a big under investment. What is this consumption again? Yeah, this is consumption. So you're right, but let me see how low is consumption here. Well, you just left it the same. So it's not that important to image. Obviously, it's really features like performance is important, which they did well in here, and everything else is really close. So good job on not a lot of slider chains in blue. It's one reason they came in first. They kept it very close and made small changes, especially in lines they didn't want to overdo. Here's family. All right, underspending quite a bit in family, which is one reason family wasn't the winner. It usually is, like image is. Eco, wow, really close match. This is unusual for a team to be, and everyone was a point apart, but it's unusual not to have a lot of wobble going on in terms of mismatched sine curves. When you're getting this, and this is what you saw in the onboarding, when you're getting the feel for, all right, I've got the motion of that, and I know exactly what the customer wants in those lines. They did a lot of study and it paid off. Again, whoops, there's almost no change. Are these fives? Okay, these are sixes. So that's one way to approach it and to be safe with it, and you're not going to lose a lot of money. So that was smart. All right, let's see. Okay, y'all's doing a great job not making two big giant changes, right? This must be low cost. Yes, because you can see right away with performance because they do not want a big low cost is not, I don't want a Ferrari image. They do. So go there. Let's go to image. Yeah, underinvest one, overinvest the other. Let's look at family. This is really interesting because um, what is that? Is this comfort? Oh, comfort. Yeah, family and comfort are It's important. Cheat sheet shows that, but also the number of dealerships are important too. Let's look at dealership proximity. Okay, there was a huge overinvestment because these are way up there. Remember, it was like 180% or something for marketing. When we looked at the numbers, this is why, because these sliders are way beyond four. Should have been a five or six, and this is what happens. It's a great following of the curve, by the way, in terms of what you need to do, which it usually is. There's only four parameters, but still. That's a lot of overinvestment in marketing because it was made, a play was made, but they also didn't make it. Remember, we looked at loss order over inventory, and we'll look at those budgets too. All right. Uh, you can see what happened in eco here. This is a darn good match in eco. Wow. This is a really good profile in eco and figuring out what does that line, but you still have to make enough to sell. And here the image was vastly under investigated, except for, is this consumption here? Oh yeah, see they don't care as much about consumption, but that's not that far off either. So and a little bit of number models and range are important. And that is it in terms of all of those. Let's go quick look at these boxes. And what's important is cash management. What's at the beginning, what's at the end, and what is the cash, what is the facility investment of in each line in order to make that production happen. And you'll see that when you have cash available, um, right here, this by the time the sim ran, they Yellow ran out of cash because they spent so much, and this sim would not the sim would absolutely not run if you don't have this at least at zero. So they need to defeature stuff very quickly, or you won't have a decision in the next decision because this is negative. This was not negative during the run, but when it matched the competition, it did because of supply and demand. So remember validators. You're not going to validate the sim if this isn't at least above $1 above zero kind of thing. And if you look at, let's see, let's look at corporate and cash is queen, cash is king, cash available. Look at cash available on our winner from a negative to 5,000 or $500,000. So cash is really important to watch when you're making investments in big things like performance. Let's go to, I get to my red team here. Move this out of the way so I can get to red team. And let's end this with corporate. And cash available again is fantastic. So yellow's got a real cash problem, and you will see if there is a government loan that you'll be at 18 or 20,000 or 19,999 because you spent so much cash that you had to get a government loan on top of the $2,000 I started to 200, well, 2 million, $2 billion that I gave everybody at the beginning. So be very careful of that yellow in terms of watching your cash. And that is basically it. Get out of this, stop share. All right, now remember, take shots, watch the video, and I will be posting some of this in Halo, but I try to keep this to edited to under an hour at least, but you can just fast forward through it all. Stop listening to me if I'm rambling on because I like to show points, but you can watch these short, just fast forward through other ones, previous ones, and see other tips like that. So in the meantime, I'm unlocking the sim tomorrow, Monday morning, so you'll be able to get in as of probably 8 o'clock or so, because all these graphics had to be made and put together. And make big shots of those white lines because you won't see them again and you'll need them in your final report. Just a heads up. Thank you. Have a great week.